but big picture, right? I'm up over 300K in the year, right? And last year I had a tough loss of, I think, last year I think my biggest losing day was close to 1 to 2K. And I recovered, right? It takes a lot of trust and it's difficult, but if your goal is to be here for a very long time, like we talked about with, do you get caught up in the 1 minute, or, how do you not get caught up in the 1 minute? Think about that in life. How do you not get caught up on the 1 day and look at the 1 year, look at the 5 year, look at the 10 year of your life? That's how I do it, because there's so much more time to go. I'm only 4.5 years in this, and I feel like I've just begun, right? I've got 20 more years coming down the road, so.
How's it going, everyone? Welcome back to This Week in Steady Trade. We apologize. We took last week off, but we got a ton of questions from you guys. It looks like 50 questions. We're going to go through as many as we can. There's a couple duplicates. Answer all your questions. We're filming this on Wednesday, National Podcast Day. So send us some love. Make sure you subscribe, like this video. If you saw us on Twitter, retweet it, get the word out there. But we're just going to jump right into it. There's no charts today, strictly Q&A. Maybe before we get into it, let's talk about, you want to go over your months? What's changed, what's going on for you guys? A little update.
Yeah. This month has been the most difficult month in a very long time. I'm green, thankfully. I can't complain about that. But in terms of P&L, only 5,500. I gave away at least a third of my profits today, which really sucks, but it's just part of the game. And I didn't break any rules. Like, I'm not trading poorly. It's just the setups that appear, and when I take them, they just suck. I don't want to blame the market, because it's really my fault. I should be trading better. But it's just September. There's a reason why traders take off, August, September, October, even, and it's essentially I could have just taken off this month. I really could have just taken off, and I really wouldn't have been in too much worse of a position. So it sucks, but it is what it is, and I'm just ready to move on to October, get a new fresh start.
Jackaroo, what about you, buddy?
Yeah, this month has been fucking terrible. Just trading just has not been enjoyable at all. Wake up every day, not looking forward to trading. Setups have been shit. Can't get any rhythm going. Missing every single shot that I take. Today I went 0 for 7, didn't win a single trade. Was up 30K after the second or third week, and the last 2 weeks I've just blown pretty much all my profits, and I'm up a few grand. So try to move on to October and take it easy, because there's really not too many good things out there right now.
To get a vibe of how well me and Jack are doing, I told Jack this morning. My last 11 trades, I'm 3 for 11. And the biggest one I have of those 3 wins is $90. So if that's any indication how this is doing for me, it's going great. So how about you, Matt? How's your month doing?
So I started the month off super hot because I was building off the momentum from the 31st of August, which was my biggest day ever. I made 17,000 that day, and then kind of momentum just continued for a week or two. And by the middle of the month, I was up about 25,000 or so. And then I just started traveling, went on vacation a couple of times, and really haven't been in touch with the markets. And because I've taken a couple small trades on my phone, but no, definitely not normal size, because when you're just not in the rhythm of the market, it's pretty hard to make good decisions, make good plays, and just be on top of things. So I didn't trade a lot the last 2 weeks. I traded today a little bit and pretty much just chopped around. I made 2,000 in the morning, pretty much gave most of it back as the day went on, because I was just over trading. But trying to get back into a rhythm, get it going again. And hopefully just have some good solid trades throughout October. The market looks like it's heating up a little bit the last couple of weeks in terms of runners. There's been a couple of runners this last week. They're not as easy, but there are runners. At least there's some movement, some volatility. So hopefully it turns back up, because September was really slow for a while. So yeah, that's my month. Slowest month I've had. Green, pretty good, but the slowest month I've had since March, I think. It's been a long time. So we're just going to roll with it. And yeah, there's our twist update. I think it's Q&A time. So I'm just going to read
All
off
right.
these questions, and then whoever feels like they have the best answer, just start going for it, right? So first question is, how many tickers would you say is enough to start drawing conclusions when you're tracking data? First off, like, do you guys track data? And how do you track data if you do? Like, how do you look at it?
Yeah, me and Jack actually tracked his setup together. Like, what was it, Jack? Maybe almost a few months ago, 6 months ago or so. We wanted to see how gap and craps performed on first green days. And something we looked at, we wanted to look at like how high it gapped, the high of the day, the low of the day, the high pre-market, the low pre-market, pre-market volume versus regular day volume, stuff like that, like the catalyst, what sector it's in. So when you track all those things, you can start to like and to answer the question in terms of sample size, how many sample size or how big of the sample size do you want before you can kind of conclude things? And I would say at least 50. Some people might say a little bit less. I know a lot of people probably say a lot more, but I think 50 is a good starting point. But the more you track, obviously, the better. And also do it probably in different markets. You probably don't want to only track it in, say, the hottest months of the year, which is like December, January, February. You want to probably track it a little bit there, maybe a little bit in summertime, because you want to get in all marketing conditions. But yeah, so that much, about 50 or more. And then, like I said before, the more variables you track, you can start to get creative and look at like, okay, how many broke their new high? When was the high set? Was it set at, right at the open? Was it set at, at 10:30 in the morning? Was it set at midday? You can start to really kind of be creative and start kind of putting on filters of your data and to find an edge.
Yeah, for me, I used to track a ton of setups when I first got started, and I think that's really important. Not that I rely on data now when I trade, but just tracking the data and looking at the stocks over and over again for me, then that's how I like developed my patterns, developed my strategies. I think it's very important to track data, and it's something I've gotten lazy about the last 3 or 4 months. But anytime I want to set a new, like discover a new setup or figure out how it works, I'll track data, mostly for the purposes of just familiarizing myself with the patterns and knowing like when something's going wrong or like maybe I shouldn't be in this trade sort of thing. That's how I use it. Anything to add there, Jack?
No, I'll answer the next one.
All right. So when do you get in sideways consolidation? Do you get in sideways consolidation? This is for either breakout or breakdown. How do you do it?
You look to wait for it to get as tight as possible. If you just think of it as you're grabbing something that's swishing, as soon as it gets to that point where it's going to just pick a direction and it's going to kind of explode in a sense, you just need to look for the level 2 to get really tight on both sides. And then usually the number one indicator is volume. When there's an increased volume perk and it kind of gets through the top or the bottom of the channel, that's when it's kind of picking its direction, and you can get in there and then risk the support level or the resistance level and see if the trade will work for you. Maybe join as it starts working and take off into big pushes or big dips when it pays you.
Well said. Getting in sideways consolidation is definitely riskier than waiting for it to break out. So yeah, the volume push through the level 2 is definitely the huge trigger for me. Yeah, perfect. Well said, Jack. Kyle, and what about you?
Yeah, I would add, I agree with everything you guys said. I would also agree, though, when you're looking to enter sideways action, you need to know what scenario you're in. So just because there's sideways action doesn't mean you should necessarily short always if it breaks down or long if it always breaks out. I think whenever I'm looking at sideways action, I already know the bigger picture on the chart, whether it should be going down or it should be going up. And if it goes the opposite direction, it's not a play for me. So if I'm looking for a breakdown or like a late day fade and it breaks a sideways consolidation level to the downside, then I will get short. If it breaks up, then I don't long it. It's no play. The play is not working. If it's a potential play that's hovering over or under a breakout level and you're looking to buy the breakout and it perks over that sideways consolidation, then you would go long, you'd enter. But if it breaks down, it goes down to the downside, then I wouldn't be entering, right? I'm specifically looking at the bigger picture setup and hoping that the sideways action breaks in that direction of that setup. Otherwise, if it goes the other way, it's no play. It's not like every time I see sideways action, I'm going to just long when it goes up or short when it goes down. It's usually only one way, and the other direction proves that the setup isn't going to work.
Perfect. Next question. We're going back to data here. What are the most simple yet effective ways to track data?
I think this one,
Go ahead, Jack.
I kind of answered it.
Yeah, I mean, I'm sure there's much more simpler and effective ways to track in terms of you could buy. There's websites that sell pre-data, so you can go to these websites. I don't know any personally, but you can go and buy data on like back testing data. There's so many people who are much better at doing it than I am. I take kind of the more tedious and long ways approach where I just track on my Excel. I know a lot of people don't want to do that because it's very tedious and takes a long time. If you're a very computer savvy and like to be like a quant trader, you can get a lot of data very quickly doing that. But it also takes practice to learn, and something that I haven't really put any time into. So yeah, it's really tedious no matter how you do it. I just use Excel.
Yeah, you can use tools like Profitly, which we all use. There's also TraderView in terms of tracking your specific trade data. And I think that's equally important to just tracking like setup data, because until you track your trades, you're like, we say this all the time, you could think you're very good at like buying breakouts and the stats come back that you are absolutely terrible. And it's just like, so that's something that's very important to do on top of also tracking patterns. And it's just like when you track data, just putting in the time to look at the market, look at the charts, look at the data. I mean, that's what's going to speed up your learning curve if you're just constantly looking at that stuff versus maybe just simply like throwing up a chart for a little bit and watching it throughout the day. Like you got to put in that extra time to become a consistently profitable trader. Next one isn't really trading related, but I'll answer it. Is there any work done to get StocksToTrade on mobile devices? There is a StocksToTrade app that is in the works. It's going to come out very soon. Don't know a specific date. I know they've kind of teased that for a couple of years, but it's like the beta version. It's out there. So there is a StocksToTrade app coming soon. Just stay tuned on that one. All right, next question. Did any of you guys struggle with fear of getting into a trade? And if so, how do you overcome it?
Use smaller size.
Yeah, that's the simplest answer right there.
Straight to the point. Yeah, I've been terrified of entering trades when I first started. I'll never forget. It was probably one of the first 10 trades I took, and one of them, I mean, my hand was shaking. Like I couldn't even hold the mouse. I was so terrified. And part of it is just practice. Like part of it, the more you get used to it, the better you're going to handle it. But like Jack said, if you're that scared to enter a trade, you're clearly already pre-planning on putting too much risk at hand, right? If you're too scared to enter a trade and you have like $50 worth of stock, not 50 shares, $50 worth. If you buy like 50 shares of a $1 stock and you're like terrified, then you have like extreme anxiety, or you need to calm down, because $50 into a trade shouldn't even phase you really. Smaller size is it should be the answer. And you can slowly move your way up to bigger size as you get more and more comfortable, and that threshold kind of expands and you get better at it.
Completely agree. And even like, I'm never scared to get in a trade, but there'll be times I'm uncomfortable in a trade, and it's because I put myself in a position where just my risk is still too big and it's not something I'm comfortable with at the time being. So like just size down, like in any of those situations, just use less size, especially when you're starting. Like you said, like find whatever dollar amount like you just have no emotional attachment to. All right, there's no commissions these days, so like you can literally risk $1 on a trade if you want to. Like there's nothing wrong with that, just to get your feet wet and then slowly start sizing up. And then, eventually if you're consistently profitable, you'll be able to size up until you're at a point where you're like, all right, like, I lost my train of thought there, but you know what I'm saying? Like start small and then you can size up just as you're consistently profitable. Don't do it too quickly either. And that's a whole different story, but size up slowly and that fear won't be there. All right. When would be the best time to place a trade when the market looks very volatile? So a little bit vague question.
When you know your risk level.
I like it. Jack's
There
got
we
the
go.
one-liners here.
Jack's yeah, it's a very vague question. Well, when I think of the market's very volatile, I immediately think of the open. The first opening 5 to 10 minutes is probably the most reckless and or choppy. And so probably one of the worst things you could do as a new trader is try to trade the open like that. I would recommend, I don't have any set rules because I didn't really implement this rule myself, but I would try to wait the first 5, 10, maybe even 15 minutes. As you get better, you can start to read stocks maybe more quickly. But as a beginner and you don't know what you're looking for, just avoid that open, because most of volatile stocks, they're trying to find the direction they want to go. And so that's when you see stocks going up and down 10% within minutes. So I would avoid that open and try to wait for a clear trend to be made and then take your trade from there.
100% agree with you. Yeah, just that first, Bohen talks about this all the time. Like that first 15 minutes is tough. And if you're a new trader, that's not really something you really should be trading, just because that's when volatility is the highest. And then trends start forming like post 9:45. So yeah, but like Jack said, also, you never really should enter any trade unless you know your risk level. So next question, what do you recommend for someone, a 16-year-old who's looking to get in the market?
Watch YouTube.
Thank you, Jack.
Straight to it.
Good
Yeah.
answer, as always.
Yeah, when you're 16, I mean, I wish I started trading when I was 16, man. But yeah, if you're 16, if you were at my age when I was 16, I really didn't have any money to start, at least disposable free money to start buying a service or starting to trade with anything. If you don't have that, if you're in that case, start getting a job, right? Start looking for a part-time job on the weekends because you're probably in high school. Study free material, start reading books. I hated reading books in high school, but when I found trading, I loved reading. So really study, because if you could just study for 2-3 years of free stuff and just be prepared, then finally accumulate enough money to start trading with and buying a service or some education, you're going to be so much farther ahead than anyone who just starts right away. That's what I'd say.
Yeah, I think that's a perfect plan. And that's what that was basically what I did, just not at 16 years old. I wish I did it at 16. So yeah, so if you're under 18, don't know all the laws. So, disclaimer, we're not lawyers, but you can open an account with your parents. So if your parents are supportive, that's a good way to do it if you do have the disposable income. But the best thing you can do is just learn as much as you can, save up as much as you can. Because not that you can't make it with a $500 account, like it is possible, but it's much harder to do than if you're able to save several $1,000s and have like a really good starting stake. Yeah, so that's what I would do. All right, moving on. Do you think watching every tick can sometimes hurt you in a trade? Sometimes I shake myself out of positions, overthinking price action because I'm watching it every second.
Depends on what kind of trading strategy you're using. If you have a long-term swing approach and you're watching every single tick, you're going to shake yourself out. But if you're trying to dip by a panic and, every single tick matters because you're going for that quick trade. So it all just depends on your trading style. And if it is a longer term kind of day trade or swing trade, you should increase your candles from 1 minute to 5 minutes after the first 4 hours and try not to focus on all the ticks. But if it is a dip buy, I would suggest, every second matters in a dip buy.
Yeah, I agree. I was going to say a much less worded answer than Jack Wood did, but yeah, I love that. I would also say it's also in terms of experience, because there could be times where you're, like Jack said, a perfect example is you're dip buying, so you need to be watching every tick. And there's been times where I'll be watching every tick on a dip buy, and I'll fake myself out that way too. So I think part of it is having the experience, but also not only if you are watching a trade where you have to watch every tick, make sure you keep in mind what your trade plan is, right? If your trade plan is to stick to a risk level no matter what happens, but you need to watch every tick, make sure you're sticking to that risk level. Like the panic dip buy is a perfect example where I might dip buy, I'm watching every tick, it looks super weak, and I want to stop out, but there's been so many times where I stop out right before low a day, and then the bounce actually works. So in that particular scenario, I want to stick to the low a day risk level as best I can. It's that kind of give and take between those two scenarios. And the more you trade and the more you start to identify what trading style is for you, I think you'll get a good grip on it over time.
Completely agree. And just like trust your plan. So there's nothing wrong with watching every tick, but do whatever you have to do. You know, like literally write it down on a piece of paper and be like, this is my trade plan, and then just stick to it. So that way, if you are watching every tick, you're not like constantly changing your mind. Maybe you just don't trust your trade plan enough. Maybe you're risking too much money. Yeah. So there could be just a different underlying.
Yeah, I love that you said that, because that made me think of like, if you had trust in your plan enough, you probably wouldn't watch every tick, right? You'd watch enough to know what's going on. But like, for example, like sometimes I'll be in like 2 or 3 trades at once. And so I try to make sure my trade plan is the best it possibly can, because once I enter one, I immediately start looking at another. And it's like I'm for like maybe 10 seconds or 20 seconds, I'm not even looking at that trade I just entered. And it's because I have that trust and I have that stop loss in mind. So yeah, I love that you said that.
What is the first pattern you look for every morning? So I guess just, is there a pattern you look for first thing in the morning, like every day, like consistently, or just a morning strategy you guys use?
No, I mean, I'm pretty unique in that I don't actually scan in the morning. I know a lot of people do, because a lot of long traders will scan in the morning because they're looking for that hot new stock with news. My scanning is done all the night before. So any stock that's on my watch list, it's already from the night before. I rarely ever add a stock to my watch list like the morning of. And so on the particular setups I'm watching in the morning, I'm usually watching for like backside, because I'm a short seller. So I'm looking for stocks that go red. I'm looking for stocks that have a failed morning spike, stocks that have lower highs, lower lows. That question is a little bit too vague. It depends on what setup you're specifically looking for. But for me as a short seller, I already have my preset list of tickers, and I'm looking how weak they are, right? Are they going red? Are they panicking? Are they strong? Like, do I need to avoid them? That's what I look at every morning.
Yeah, no, that's the best answer, I think, too, is just like you have a set plan, set watch list, stick to it. A lot of what I do is like I make that watch list, and then like I pretty much adhere to the like don't trade for the first 15 minutes unless it's just so blatantly obvious, because I can't tell you how many times I entered a trade that was according to my plan and just got chopped up in volatility in the first 15 minutes of the day, and then it continued to work. So, and it also depends on your strategy. Like everyone's different. So, all right. Next question. For a day one runner, would you prefer buying strength or buying weakness? And are there any disadvantages? I'll take this one. Again, I think it just depends. Every situation is different and every situation is unique. Sometimes it's consolidated really nice and you can buy the strength because there's a clear risk level. Sometimes if there's a really solid trend, I can scoop up dips, risking the previous dips. There's no right answer. It's just very situational. And yeah, it depends on the stock and depends on what resistance there is on the daily, what volume there is. There's just a lot of factors that contribute into it. But if you're consistently buying strength and you find yourself consistently buying the top, that's probably a time to reevaluate and be like, well, maybe you're not buying strength right. You're buying it you're just getting FOMO, you're chasing the stock. Yeah, that'd be my approach to that. All right. If you're taking losses with a particular pattern, what are some good ways to figure out if the issue is the pattern or the issue is your execution? It's a pretty good question.
You should be tracking your trades and noting if your pattern was successful, if it worked, and you just didn't make correct trade plan. Or if your pattern, like for say me and Kyle, our patterns just every single time have been just failing. And it's not due to me and Kyle trading poorly. It's just due to patterns just aren't working right now. And I'm acknowledging that. And if you're a beginning trader, you should just be tracking your trades and just noting how they're playing out, and maybe switch your strategy if it's just not working. And even sometimes if you just can't execute properly for whatever it is, if you just are doing something and continually messing up and you're really having a hard time fixing your execution, still move on, because there's a ton of other patterns out there. There's a ton of other niches. You just need to wait till you find what works for you.
So yeah, I've had this experience with buying breakouts where early in my career I was trying to buy breakouts and be very patient with them and let them run. And I always either made a wrong trade plan or I got faked out, and then I would continually see the trade work. So that proved to me that A, the breakouts are working, and that B, I failed to like be patient enough or make a good enough trade plan to like let them work. And you can see other traders, like if you know of other traders who are trading the same setup you are and they're making money off them, then you know you're probably trading it wrong, or you have a setup that isn't even a setup. You're just trying. If you're not tracking and you have no like criteria of what you're trying to trade, like, oh, this setup shows me this, this, and this. This is how you know when you should be entering. This is how you know when you should be exiting. If you don't have that, then you might not even have a setup to begin with. So yeah, I would say that. But also too, I think it's important to know that if you do have a setup and it does work, but you can't trade it well, right? Like Jack said, there's plenty of other setups to trade. Do not feel tied that you have to be. I've seen so many traders get sucked up and like, I have to trade this one setup correctly. And if I don't trade this setup, then I don't want to trade. And it's just like, that's just ridiculous. Like it's just so many other setups that can fit your personality. You just have to find them. Don't just because you've put time and effort into one setup, do not feel like you have to continue to commit to that one.
Great answers. Yeah. And I love what you just said. Like, not everyone's Tim Grittani, not everyone's Jack Kellogg, not everyone's Kyle Williams. Like, there's not one way to do this. So like, just because you look up to someone and that's how they trade, you don't have to trade exactly like them. Next one, how do you balance locking in gains versus letting your winners run, specifically when you're under PDT? So that's a tough one. The way I approached it, right or wrong, was when I was under PDT, my only goal like in life was to get over PDT. So in terms of letting winners run, I found out when I was trying to do that, like, swing for home runs basically is how that mentally worked out for me because I wanted to get to PDT. I took like larger losses. So taking like singles super consistently until I got to PDT. And then kind of when I got to that time frame, that's like when I like rewired my brain and started trading differently and scaled in and out, which I couldn't do below PDT. Yeah, not that that's right. It's just PDT, when you're like not a newbie and like you've been doing this for a year or two, it's frustrating and it's tough. And so that's why my mission was just to get above PDT. Yeah. What about you guys?
I would say check with your broker on your particular broker's rules with PDT, because for me, my main broker that I used quite the most was Interactive Brokers. And they actually let me scale in and scale out. I don't know if they do anymore, but I would double check. But when I was under PDT with Interactive Brokers, they would let me buy, and then sell. They wouldn't let me buy, sell. So if I had all my buys on one side and all my sells on the other side, I was able to have all that count as just one trade. So that was really beneficial. And I think other brokers, you may not be able to do it like IB, but I think E-Trade you can buy once and then sell twice. Don't quote me on that, but I think that's another option some brokers offer. And so that's what I would do. In Interactive Brokers, I would maybe have one or two entries, and then if the stock went my way, I would take off like half or a quarter, and I would let the other half ride. So it's like I would take, partial profit on the trade, and then let the other half be like, let your winners run. Second thing to note too is in this small cap space that we trade, most I wouldn't say gurus, most very successful traders who publicly post their trades, you can look at their stats on Profitly. And after looking at them, I've looked at them, the average gain has been anywhere between like 7 or 8% on the low, and usually between like 12, 15, 20% on the high. So if you're finding your gains are around that range, you're probably good to start taking profits. Like I said, you maybe take your half point off there, but usually if you're up that amount in that range, you probably should start taking some profits.
Well said.
I'm a big advocate in just taking the gains when it starts to not look good. And for me, I can't hit these massive home runs, and that's not what I want to do. I'd rather lock in 5 singles than hit 1 home run, because just mentally you're going to be more zoned in and centered, where if you're trying to just hit these home runs, you're constantly going to be up. You're constantly going to give it all back. You're constantly going to be up. You're constantly going to give it all back. And then this one time, you'll actually hit a home run where you make a big trade, but all those times you gave back all your unrealized profits, it's just going to equal it out. And you think that you need to hit a home run to get over the PDT. You want to get lucky. You want to wake up to a 500% gap. And that's just a toxic mindset. And for me, once I learned kind of how to trade and I dipped my toes in and I wasn't scared anymore, I knew that it would be a faster process if I was working my valet job as much as I can and saving up money there to get over the PDT rather than trying to trade over the PDT. Because I knew just with my personality, I couldn't really do that because I'm not going to hit these home runs, and it's going to try to force me into not cutting my losses because I don't want to waste a day trade on a loss. So for me, I'm really against the PDT. And another thing you could look into is a cash account where you're able to trade how much money you have, but there's like a couple day settlement where you can't trade. I'm not too familiar with it, but I know some people use that to get around the PDT or open multiple brokers, of course. But at this stage, you really just need to take everything into account and see what's best for you.
Yeah. Great answer. I love this question a lot. I think we should have some good answers here. And it's, how do you stay focused on the long-term goal and not get distracted along the way?
For me, it's been pretty easy to just consider the long-term goal just because, I didn't make want to get rich overnight plan. I know that this happens over multiple years. It's not going to happen over multiple months or multiple days. It's going to happen over multiple years. And, drawdowns or huge speed ups are just going to be part of it. And you just want to stay as consistently trucking along as you can possibly go, trying to keep that mental there and just try to show up every day. And that's why, as I was noting last question, I'm a big advocate of just locking in, because if you just lock in, you're going to be going towards your goal slowly and steadily every single day rather than going through these dips, upswings, dips. And that's just what will get you distracted off that long-term goal, because you're constantly going to be having doubts about yourself, or you're constantly going to be getting cocky. So it's all about just trying to maintain that gradual equity curve as best as possible.
Yeah, I agree. I would say, like, just, I knew the goal for me was to trade profitably for a living, right? And so that doesn't just happen in one day. That doesn't just happen in 1 week, 1 month. That happens over years, right? And so how do you not get caught up in the day to day is like you just trust that process, and that not every day is going to go your way. And I know a lot of people struggle with this, where if they have a losing day, they think it's over. And I found that I have this picture here. It's like, let's see if you can see it. It says days versus years or decades. It's like on the middle days, you're going to go up and down, like perfect the other day. Me and Jack both had pretty big losses today. And a year or two ago, I'd be devastated. I'd feel like I suck, like it's over. But I've been through this before, right? And so yes, it sucks. I lost like $5,000 today, but big picture, right? I'm up over 300K in the year, right? And last year I had a tough loss of, I think last year I think my biggest losing day was close to 1 to 2K, and I recovered, right? It takes a lot of trust, and it's difficult. But if your goal is to be here for a very long time, like we talked about with do you get caught up in the 1 minute, or how do you not get caught up in the 1 minute? Think about that in life. How do you not get caught up on the 1 day, and look at the 1 year, look at the 5 year, look at the 10 year of your life? That's how I do it, because there's so much more time to go. I'm only 4.5 years in this, and I feel like I've just begun, right? I've got 20 more years coming down the road. So
Yeah, I couldn't have said it better myself. The way I've always looked at trading, kind of always looked at everything, is like I set like 5, like 10-year goals. Yeah, and like everyone wants to make $1 million tomorrow. Don't get me wrong, like that would be awesome if I made $1 million tomorrow, but it's just not realistic. And what's realistic is working towards something every day, like little by little, so that way you can achieve what you want in 5 years, rather than like getting discouraged or burnt out because it didn't happen in a month. Like that's just not going to happen. Grant Cardone says everything takes 10 times longer than you think. And like, that's like true. Like if you think you're going to get this in like a month, like that's what a lot of newbies think, like it's probably going to take at least a year before you even understand what's going on, sort of thing. So everything takes longer. Just like plan for that and accept it and just keep working towards it, every single day. All right. Moving along, this is an interesting one. And I know we kind of have different approaches to this is, what percent of your profits do you pay yourself, versus just like either reinvesting in your account into trades and education? What's your guys' approach?
I'm very, I mean, this kind of dips into financial advice, which none of us are advisors. So don't take our questions or answers as legitimately that works for you. But for me, I am a very extreme when it comes to paying myself, in terms of, a lot of people would probably disagree with me that I probably pay myself as little as humanly possible. I'm extremely frugal, not too frugal to the point where I'm cheap. I wouldn't call myself cheap, but I'm a huge fan of delayed gratification. So in terms of all my profits, the only money I've pulled out is to live off of. So to pay rent, to buy groceries, maybe the little expense here or there, like a vacation or anything like that. But in terms of like paying myself to go buy a car or anything, I haven't done any of that. Now, what percent is that? I mean, it's very small. It's little as possible. Like I made a budget of like, what could I live off of, and how much is that? And that's all I pulled out. So again, it's different for everybody. It's like how much, if you have a house, you got to pay a mortgage. If you have kids, like you might pay for their college or either their food. I mean, kids are super expensive. Like you have to really take a hard look at your life and your expenses and how much would you need to make to support yourself. Because for me, I'm living the cheapest I probably will ever live, right? As I get older, the more expensive my life will get naturally. And so for the last 2 to 3 years, I've pulled out very little money, like the smallest I ever will pull out. So.
Awesome. Jack, what about you, buddy?
For me, I was a lot like Kyle, where I lived on $1,000 in my bank account for pretty much the entire come up until I got to. It just came to a point where I was like, "There's too much money in my account. Like, there's too much money. I don't trust myself. I don't want this much money." And I found a good happy medium for me is like 200K in my accounts. I don't want to be ever taking positions over that, at least this year. So as I've started to even start planning for taxes, the last 3 months, I think I've done 350K wires, put about 150 in the bank, and that still leaves me to trade with, around 550 to 600,000. And just like that, I have a few accounts, $100,000 to $200,000 each, and that's what I'm going to continue to grow. And I will keep wiring out as I start making profits now to start paying for that upcoming tax. But I don't really. I did kind of want to buy a car and a house back in June or July, just because it was a great first 6 months. And I was burning out a little bit, and I kind of wanted to distract myself from the market a little bit. And I just kind of decided against it because I was like, do I really want this? And just for me, not right now, because I just want to keep focused on my goal. I want to keep growing as a trader and reaching higher potential. So I'm just going to continue to stick to my goal and just kind of take it from there, where I trust myself with the money in my account and I feel good about it.
It's funny you mentioned $1,000 in your bank account, because that's literally what I did for like all of 2018, like most of 2019, because again, my goal was to get to PDT. So any sparing, like I would never spend $1,000 in a month, like usually a couple $100 a month, because I was in college, like my expenses were super low. But yeah, I had $1,000 in my bank account, and every spare dollar I had, I would just throw into my trading account to try to get it to PDT and just like save my way there. But currently what I do, and it's different for me because I'm also long biased versus you guys are so short. Like my account's usually between $40,000 and $50,000. Anytime it gets really above $50,000, I wire money out. And that's been my account size all year. Like if I need to take more than a $40,000 position, like 99% of the time, unless it's OTC stock, like I can do that. There's leverage when you're a long bias trader. And like, I also don't really want to be taking $75,000 positions, because like a 10% move on a stock to the long side is like much more likely than than shorting. Like when you're shorting, you can take bigger size and have tighter risk, where on the long side, you usually need a little bit wider risk to deal with the fluctuations. So like, yeah, I basically keep my account between 40 and 50,000. Everything else, I just completely withdraw out. I opened a new account at Interactive Brokers, basically don't use it for anything. But yeah, and that's probably something that I'm just gonna just evolve and trade. Like Jack said, like that's pretty much his account size for this year. That's pretty much my account size for this year. And just as I grow as a trader, like it'll change. That's just working for me, wiring out. It's not like I spend the money. It's just I just move it out of my trading account, put it into like my savings account, and it's just sitting there doing nothing. So, but it feels good to pay yourself. Yeah, it feels good to pay yourself after 3 years of barely making any money, and then 2020 happened, which was pretty awesome. So, last question. We're gonna end off on this one. This was a good episode. Is what are your guys' goals, like our goals in life outside of trading? If you care to share, yeah, just what do you want to do? You know, we're all young. Where do you want to be in 10 years?
Oh shit. I've thought about this, and I almost don't know yet. I'm almost been so consumed with trading every day that this is, I mean, I don't know if it's a good thing or bad thing, but my goal for so long was to get where I'm currently at right now, like making 10, 20, 30, sometimes 40, 50, $70,000 in a month. That was absolutely the goal for me 2 or 3 years ago. I guess now it would just be, and this is why like I said, back to our last question, why I've kept so much money in my account is because naturally I want to become a bigger trader. So it's like, I would love to start averaging making 100, 200K a month. But that, again, I need a much bigger account. I need much more money. In terms of like, exactly beyond trading goals, I mean, yeah, I want a family. I want to own a home eventually, but it's just, like I said, I'm so consumed with trading that those goals are kind of on hold. And that might be a good thing, that might be a bad thing, but I'm just very consumed right now with what I'm actively doing currently. So.
Baller. Jack?
My long-term goal is always, hit the $1 million milestone. And that's kind of the goal that I set when I first started trading. And I'm kind of approaching it towards the end of this year here. So we'll see if I can approach it by the end of this year, early next year, middle next year. It doesn't really matter when it happens. I know it's going to happen. It's just a matter of when. And then after I hit that, probably take some time to reflect and think about new goals that I want to set, whatever it's going to be. And I don't want to set something with as much pressure that I did with the $1 million milestone. That definitely helped me excel this year, where I knew the market was hot. I knew what I was doing was working. So I kept sizing up and I kept pushing the boundaries. And now these last couple of weeks, I've had, the first couple red weeks of the year, and it's the first kind of pullback. So I'm dealing with that. And, I'm completely fine. It's not like it's a massive dent and I'm all messed up in the head. Like, I'm doing fine. It's an annoying pullback. And I don't really, like I said, I don't care when I hit the $1 million milestone, because it's going to happen. It's just a matter of when. And then other than that, I just want to be happier, less tense. So I'm going to set less, like the goals that I'll set after the million will be a lot less aggressive and just something more mediocre, more happy. I always like setting lower goals and then trying to achieve better. Always set something low, and then so you don't put a lot of pressure on yourself. I never put a time to when I wanted to hit the million, but once I started really upticking through June, July, and August, pretty much 3 back-to-back 6-figure months. This was the first month where things kind of slowed down and still small green, but there was a ton of lessons learned. So I'm just going to get back on track and take what the market gives me and just try to be happy and grow as a trader. So that's all I got.
Yeah, I love it. My like goal forever was always just to be like quote unquote like retired by 30. That was like always what I wanted to say. What I mean by that is like just enough money to like do what I want, whether that's work or, you know, trade or just so money doesn't influence my life. Like you just see all these people out there that money is the deciding factor for everything they do, where they live, like, you know, what they buy, like, and yeah, like that's just not the life I've ever wanted. So it's not necessarily a dollar figure. I mean, I'd be lying if I wouldn't say the more the like merrier, like, you know, but it's just, I just want to get to a point where like, it's just not something I think about. Like, you know, I don't need a Ferrari, but again, like if it got to the point where I was like, you know, like I can afford that if I really wanted it at the time, that'd be super cool, but it's not something like I need. I don't need the Ferrari. It's just, yeah, I want to be able to remove that stress, the stress of money just from my life. That's just not the stress I want. I don't think anyone wants it. So that's my goal. All right, boys. Any closing thoughts, remarks for our question Q&A?
Trading wise, I'm ready for October to start. I'm ready to move on from this awful September for me. So, yeah.
Agreed. Yeah. Sweet. Well, that's a wrap. Thanks for watching, everyone. We're recording this again on the 30th of September. Tomorrow's October 1st. It's a new month. Let's end the year strong. And yeah, thanks for watching.